Welcome back to News at Prime. Let's wrap up the day's business now. Fuel price relief has ground to a halt at the pumps. The price of both petrol and diesel are set to see small hikes for November after 5 months of decreases. Now, 95 octane petrol will increase by 25 cents per litre, 93 octane by 14 cents per litre, and diesel prices will also rise by 20 to 22 cents per litre. The new prices will kick in on Wednesday. This means that motorists will be paying 20 Rand 50 cents a litre for 95 unleaded petrol at the coast and 21 Rand 30 cents in the inland regions. 93 octane unleaded petrol will set you back around 20 Rand 87 cents a litre. The price hikes for November are due to substantial surge in international oil prices around the middle of October. Now, to further unpack the changes, we're joined by Makwe Masilela, Chief Investment Officer at Makwe Fund Managers. Makwe, looking at this, we've had a good time, 5 months where we've seen decreases. I'm sure a lot of motorists were happy with that. But what's triggered the latest increase?
We need to remember that we are a net importer of oil, and the very same oil is priced in US dollars. So if oil prices continue to go up and we're using our currency and our currency is not firming, then unfortunately one will say you are importing inflation into the country. So we have been at the mercy of elevated oil prices for all the reasons that we know, including the escalation tension in the Middle East. But the rand at least tried to help because it did a little bit better this time around. Unfortunately, the firmness thereof was not sufficient to be able to give us another petrol price decrease. So we are all at the play of what has been happening with high or elevated oil prices.
Now, one would argue that at below $80, the price of Brent oil was still low, and it wasn't really necessary to have this hike. Could government have shouldered a bit of the costs instead of passing it on to consumers?
Not really, because if government has to get involved, they have now to look into the taxes, which is a genuine argument or a debate that we still need to have. Remember, during COVID times, they did step in at some point when it comes to the fuel levy. But as it stands now, we don't look into the price as a once-off per month, that it was below 80. It's a question of where it was compared to the previous other months. So it has been at elevated levels on average.
Are we then expecting the OPEC group of oil-producing countries to cut supply in order to raise prices further?
They were supposed to do that as from December to start increasing output by 180,000 barrels per day. Remember, the cut now, as we're talking, is almost 2.2 million barrels per day. But the guys decided to postpone that up until January, and maybe because they want to see what is going to be happening with the US election, or also what is going to be happening with all these interest rate cuts that we'll be getting globally, whether those cuts will be able to stimulate the economy and also